Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a Friday morning, last day of what has been basically a very, very hectic week. It's a holiday-shortened week. But guys, did you feel like there was a holiday in between?
They did not feel like a holiday. In fact, the way the markets moved, it looked like there were 3 more days added to this week this time around. But, you know, the good part is that not only is it the last day of the week, but it's also the first day of a new series. And a lot is riding on the September series in terms of news, cues, and a lot of the developments that may so happen. So we'll discuss all of that, I think.
Absolutely. And I mean, festivities galore. They continue as the Ganesh festival revelries are all over. Plus, of course, the big bonanza, and we'll spend a lot of time today on the show talking about it. Tim C's story, all the possible GST cuts that have been moved in that bill. Of course, what comes through the council, we'll see. But I think it just adds to the festive fervor if indeed some of those cuts come through.
Lastly, all mostly on expected lines.
Yes.
This is what we are what I saw: auto, cement,
Yes.
consumer durables, etc.
Daily consumption items coming down to 5%.
You also just have to look at the couple of details that may come by, in the sense that how much of that is without input tax credit, with input tax credit. So I think a lot of the chartered accountants this
9:30 a.m.
after
When ask the question, we'll have
put a lot of pen to paper, I guess.
We'll have the details coming up. Let's just quickly get to what you need to know as we begin the session. So first up, right, U.S. equities, I'll start there, jumped to a record high. Basically, from the session lows, markets recovered quite a bit. And solid economic data, which we will refer to. So S&P was up 1/3%, Nasdaq was up about 0.5%. The 10-year macro market's quiet. 10-year yield down about 3 basis points. Oil was up about 0.5%, so nothing very much. So the data, second quarter GDP was revised up from 3% to 3.3%. The expectation was that it'll be revised up to 3.1%. So it was a beat. And the jobless claims number, which the market got in the US, was also pretty benign. You'd wonder with this kind of data and this kind of macro market reaction, etc., why did the dollar go the other way? The dollar index was down 0.5%. So we are now under 98, 97.9. The 50-day moving average is around that 98 level for the dollar index. So actually, the weak dollar is one of the strongest opinions out there on Wall Street. The dollar will weaken. On pretty much else, there is a fair bit of debate, etc., but I think there is using a political term, bipartisan kind of consensus that the dollar perhaps is headed lower. We'll see. But this is important for us as well. It's a determinant. I mean, it's not that it's mattered quite a bit. FIRs have been still big sellers, and we'll get to flows, etc., in just a bit from now. But keep an eye on this one. Now, Fed Governor Lisa Cook, of course, filed a lawsuit against Trump. She pushed back earlier as well when Trump said, well, she has to go. Later today, we get core inflation, July core PCE inflation. That's essentially what the Fed's favorite inflation gauge is. Monday is a market holiday in the US. Cash markets are closed, futures are open, but they shut early. So in that sense, I mean, you're going into a US-less sort of weekend when you come back on Monday. Market positioning, and Mangalam, of course, will look at the F&O stats more closely. But a cursory sort of glance with the expiry yesterday suggests that the positioning, etc., is largely similar. FIs continue to sell about $4.5 billion in cash. Locals continue to buy about $9.5 billion in cash. But FIs continue to add to and build index shorts. $600 million worth of index shorts added in this particular series. And of course, the retail public seems to be pretty upbeat with the index long addition, etc. As I said, more granular data with Mangalam in a bit from now. Of course, I mean, now we are running into the September 3rd, 4th GST meeting. Center is proposed, and we'll put all those rates, etc. As I said, they're largely in line with expectations. So I'm not going into details here. Timsy will address that in just a bit from now. But that's the trigger. The big overhang still remains, of course, that 50% tariff from the US. And how the market will be able to navigate that, I think, is the real question. Without a doubt, I think that remains the bugbear for markets, which I think will prevent any upsides. Will the market sell off from here is the question, and that brings me to levels here. So we basically on the Nifty closed firmly below the 20-day moving average. As of day before yesterday's close, we were kind of just under it, hovering around it. But yesterday's close broke it decisively. I put this level out yesterday as well. First stop is 24,337, which is the 8th of August low. And I think that's the first stop. Bank Nifty is close to a weekly lower band, which is 53,563. The support here is the 50%. If this goes, that is 53,563. The 50% retracement to the rise comes into view, which is 52,692, 52,700. Basically, it becomes a support target, however you want to look at. And of course, I mean, the 20 days, the trailing upward level, which is 56,370 for the Nifty Bank as well. So just, I mean, some levels to work with as we kick this last session for the week out. GIFT Nifty will give you a sense of how we are starting, about 14, 15 odd points higher. So it's quieter as compared to what we had yesterday morning. Mangalam is with us on the wall with the F&O stats. Mangalam.
Well, I'll set the September series up for you first by telling you what happened in the August series. We saw a range of nearly 1,000 odd points, and thereafter the August series, the Nifty ended about 270 points lower, taking July and August losses to a cumulative over 1,000 points. And as we enter September series, history tells you that September series is actually known for big moves on either side. So September 2021, we had a near 1,000-point move. Then there was a 700-point decline the next September. Last September itself, we saw a near 1,100-point move on the upside on the Nifty. So the series is known for big moves. And known for big moves, what are the positionings suggesting right now? You know, the rollovers have been on the higher side, telling you that the conviction on the short side has been higher, 84% versus 78%. Even the open interest on the Nifty at the start of the series at 1.6 crore shares is higher than the 3-month average of 1.44 crore shares. So higher rollovers, higher conviction. What does that imply? It implies that those who were bears have actually increased their bearish positions. Prashant just said that, you know, the FI positioning hasn't changed. Well, it has for the obverse. In fact, at the start of the August series, the FIs were just 10% long, and now they are just 8% long. And 8% FII long exposure is actually the lowest in terms of long exposure at the start of the new series ever since the NSE has started revealing that data. Their net exposure is nearly 1.7 lakh contracts on the short side. Who are the counterparties to the FIs? We have our domestic retail clients and HNIs. 72% long exposure, 1.27 lakh net long exposure for them as well. Is FII shorting necessarily a bad thing? Perhaps not, because I was looking at data. You know, in April 2023, the FIs were long at just 9%. Over the next 4 series, we saw a 2,600-point move on the upside on the Nifty. November 2023 and Feb 2025, the FIs started the series with just 11% long exposure. The next 2 to 5 series, we saw 2,300 to 2,900 points on the way up for the Nifty. So not necessarily a bad thing, especially given the triggers that we have going forward as well. So the last 2 series, we've seen an 1,100-point decline on the Nifty. Now we start with the biggest trigger. Today we have Reliance, AGM, with the sheer weight of the stock on the index. Any positive news could spur a bit of a rally. Then we have the GST rate rationalization, India-US trade talks. Even as the overhang continues, any sort of resolution may trigger a bit of a rally. We'll watch out for that. And thereafter, towards the second half of the month, we have the US FOMC outcome that will come by. The first rate cut is expected out there. You'll see pre-festive buying, and also keep an eye out on impact of heavy rains on demand on the ground. So all these factors together will be ingredients for the September series. Known for big moves, the FI is just about 8% long.
Okay, well, let's take a look at what's happening across the Asian markets. And Asian markets are mixed shade, actually, as we speak. Some of the markets, China, Hong Kong, for instance, they're still flashing green. But there's some profit-taking going on in Japan. There was inflation data that came out of Tokyo today. And the rise in inflation is not as much as what was anticipated. So those are some updates. By the way, on FPIs, and I'll put up that data in just a bit, the FPI cash market trends are really interesting, and they've simply mirrored the delays that have taken place in the India-US trade deal, which of course still hasn't seen the light of the day. And as we're rounding up this month of August, the selling is almost 29,000 crores in the cash market. So it's progressively increased from July. And I will put the numbers up in just a bit. Let's get started then with the equity call of the morning. Chris Wood of Jefferies says Jerome Powell's Jackson Hole speech has been interpreted as dovish by the markets. He says the message conveyed was that the Federal Reserve will prioritize the labor market over inflation. He adds if the likelihood of a 25 basis points cut on September 17 has risen, this also means that the next payroll data due to be announced on September 5 has become more important than usual. Meanwhile, he says the inflationary pressures from tariffs are only just starting to show up. On India, he says one change will be made in the India long-only equity portfolio this week. The investments in Aditya Birla Real Estate will be removed and replaced with an investment in M&M. So that's Chris Wood saying that they're giving a thumbs up to M&M in that portfolio change.